Jules, I had to call security to come get a spider out of my house yesterday.
Morning. Morning, everyone. Let's get going here.
Swear to God.
How soft is that, dude? All right. Okay. U.S. markets obviously came off a little bit yesterday in the wake of the lead up to the U.S. budget deal. We actually bounced up off the lows. You can see there quite early on in the session, and really just kind of traded sideways into the close of the day. We were down on every sector across the board, and no one really knows how soon this thing's going to end. Just some details about this. We are going to have between 800,000 and 1 million government employees furloughed today. Which basically means that they have to go home, and they're not going to be getting paid while they're at home. They're saying that on a daily basis, this will affect GDP by around 15 basis points every week, at least $300 million per day. That this goes on for. So, this is really, the net effect of this is not very good. Historically, if I can give you a little bit of context, the last time that this happened in 1995, there were two 2-week periods where it really happened in, I think, December and January. And both periods, we actually saw the stock market rise. So, this isn't necessarily going to be something that's going to kill it. I mean, obviously, we've run up nicely into the end of the year. We haven't really had a pullback, so you would think that this would be some sort of catalyst, but we'll have to wait and see. Asian stocks had a bit of a mixed session, kind of fading from mostly all being up at the beginning of the morning. We had Hong Kong and China that were closed, but yesterday was the first nice pullback we've actually had in at least a couple months. So we did have the Chinese PMI numbers that were a bit of a miss. What's that? Probably yesterday, but still rising for 3 months in a row. So this is, we're seeing some positive net effects there. We had Japanese Prime Minister Abe, which decided to go ahead with the sales tax increase, raising the rate from 5 to 8%, and then so a bit of a dampener for the Japanese markets with an economy that they're still trying to get going. Very little out on corporate action today. SAB saying that the strike will continue today. FAWU, no real surprise there. We had a lot of market data that's out today. We had Japanese jobless rates that were a bit of a miss. We had the Tankan manufacturing survey and manufacturing outlook, which were both a beat. We've got Chinese PMI numbers that were a bit of a miss. That's the state number. The Korean export numbers, that's actually quite a big miss at 1.5, down 1.5%, expected to be up 2.5%. I'm not really sure if there are any reasons for that that can be explained. But if not, that's quite a bearish thing. A lot of people look at the Korean exports as a bit of a canary in the coal mine. So that's something to take note of this morning. We had the Australian Reserve Bank that kept interest rates intact today. We've got PMI numbers pretty much across the European region. We've got unemployment change in Germany. We've got the unemployment rate out in the Eurozone. We've got local PMI, and then later in the States we've got construction spending and ISM manufacturing. So quite a bit of data out today. Nothing that I think is going to be too incredibly significant. I think the focus will continue to be on the outlook with the U.S. deadlock there. All right, let's jump into the maps. Okay, first thing I want to have a look at is Amplats. In fact, let's have a look. I didn't even really look at this morning, but I just want to have a quick look at the futures market here and just sort of see where we are. We obviously potentially dropping a bit of a level where we really broke out from here. around 39,650, which we right at this morning's open. I think we drop that sort of level, we can at least get down here toward where our breakout was at 39,250. If you look at a longer term chart here on the Aussie, you can really see that there's nothing, there's no real support. I mean, this might be our first. That's the 39,000. What level is that actually? Yeah, that's 450, which is a little bit lower than that. That may be some sort of level, but I think that there's no real significance to that. What I would look more at would be something along the lines of down here, where we tested at where we broke up from at 38,800. So that I think would be kind of a short-term pullback. It would probably line up quite nicely with some sort of trendline support around there. So we'll start to see, I think we should get some sort of pullback, at least to trendline support here, which is maybe down around that 39,250 level by the time we get there. Let's look at Amplats. Amplats really is kind of failing to give us anything in terms of a significant pullback. You can see there really it's come down in the last few sessions to test support, but I mean it's only pulled back about 10, maybe 15 rand from the highs, with the rest of the sector really kind of giving up a lot of gains, and now it's starting to look as though it's forming a little bit of a flag pattern here that we could break out to the upside. So watch this one closely. We break out to the upside of this flag, this thing could end up kind of squeezing some of these shorts and taking some of them out a little bit higher. I want to look at gold fields here. You can see it's kind of testing where the consolidation has been recently, and if you see here on the 30-minute chart, we're really down here on a closing basis. You can see here the levels about 45.80 right there. And the breakdown really happened from this. We've been in this range from just over the 50 levels. So I think that we could have a nice little breakdown to the downside if we drop 45.80 in gold fields. We closed right up around that level in the States with the rand strengthening a little bit. Obviously, the gold price is up a little bit this morning, but if we end up drop 45.80 and we can hold there for a little bit, I think there's more downside. Gold fields maybe another $4 to the downside. All right, let's look at Bidvest. Bidvest, you can see here, we talked about this the other day, putting in a little bit of a sideways consolidation here over the past maybe month, and you can see we really dropped that yesterday and couldn't regain it on a closing basis. That level was about 253. If we can stay below 253, I think this thing could drop out to about 245, 246. Not a whole lot, but obviously maybe come down even test a 200-day moving average or some sort of trendline support. So just a small idea over the next few sessions if you're looking for shorts. Aspen really coming down here. You can see here on the year chart. I'll shorten it up for you now, but at some sort of significant support there. If we shorten it up, you can see that really this is our level. Can maybe somewhere around there, about just south of 263. So call it 262.50 is where I would draw support. And we really closed there as of yesterday's session, or a couple. We probably closed 50 cents above it. So between 262.50 and 263, if we drop that in Aspen, I think that we can fall a little bit further. Obviously, I think the setup on this chart is actually still quite a bullish setup. But just keep an eye on that downside. Where we broke out from was down here around 240. So if we do drop out on that from the bottom of 262.5, I think we can trade all the way down to test support around 240. All right, ShopRite. Let's just look at them and just looking for areas of relative support here. You can see that how significant this kind of 164 level is in ShopRite. A lot of touches, we really broke down below it and then just couldn't get above it for a month and a half. As we got above 264, that's really where we broke out, or 164, that's where we broke out from. We're coming down yesterday, obviously, because it's 65.40. I think if we, get some sort of a test there yesterday, Foschini was a great example of that. I mean, we came down and tested significant support here. What we know is 103. You can see that we tested right at that level, actually a touch below it even, and we held it nicely. So I think buying some shop right there on support might not be a bad play. The last one I'll show is on the LSE. We'll look at Rio Tinto. And just dropping support. These miners in the UK have really been underperforming quite badly. You can see yesterday's session we dropped the support trendline support quite nicely. Billiton also over there looks quite bad in this head and shoulder setup, which we've totally dropped below. However you want to try to draw that, but bottom line is. We're dropping support in some of these miners in Europe. They haven't been trading well the last few sessions. I don't know if that's telling us something, but it's really been underperforming the markets in general. And that's it for today, guys. Thanks a lot.